Good afternoon. I am Sébastien Henin from TNI Asset Management, and I am here today with Devier Avora. The month of February was great following a very challenging month in December. The S&P Pan-Arab Index was up 3.3% in February and is down 7.2% year to date. All major MENA markets have closed the month in positive territory. There are two major factors to explain this movement. First of all, oil prices have recovered strongly. The Brent quality is up almost 30% since the lows of January. Another aspect is the resilience of corporate earnings. Listed companies have released their financial figures for 2015. And excluding some cyclical sectors such as petrochemicals and constructions, the outcome was pretty positive. We had even some positive surprises in terms of dividends. Companies have been pretty generous. In this environment, investors have started to accumulate some great dividend, high dividend yield stories in their portfolio. Devier, let's talk about the UAE market, the star performer of the month. What can you share with us?
The UAE markets continued with the strong rebound which started in January 2016. The rally last month was broad-based. Dubai's DFMGI index gained 8.1% during the month, and Abu Dhabi's ADSMI index gained 7.3% during the month. The blue chip real estate and banking names did pretty well during the month.
On the macro side, there are a major piece of news with the announced introduction of the VAT. Can you share some light on that?
The value-added tax is expected to be implemented in January 2018 at the rate of 5%. And this tax, when implemented in the first year, would lead to around $2.5 to $3 billion in revenue for the government. GCC level agreement is expected to be reached by mid of this year. To put this thing into context of GDP, this is equivalent to around 0.8% of the country's GDP in 2016. And as per IMF, UAE is expected to witness a fiscal deficit of around 7.5% in 2016.
If we look at the different sectors, the telecom sector brought a lot of attention. What are the reasons?
The telecom stocks such as Du and Etisalat, they witnessed a strong performance during the month. Du gained around 9.8% during the month, driven by the expected opening of the stock to foreigners. After a strong rally in 2015, Etisalat continued to head higher, driven by the expected inclusion of the stock in the FTSE Global Equity Index. The stock, if gets included in the FTSE Equity Index, could witness around $200 million in passive inflows, which is equivalent to 20 days of its average daily traded value during the last 1 month.
Let's move to Saudi Arabia. The Saudi market has underperformed its regional benchmark. The Tadawul index is up only 1.6% in February. How can you explain this counter-performance?
Saudi market increased slightly during the month, driven by a rebound in the oil price. The cement and petrochemical sector outperformed during the month. However, in context of the region, the Saudi market witnessed a subdued performance as the investors' concern was linked to the massive military drill launched by Saudi in coalition with 20 more countries. Countries such as Pakistan, Egypt, Morocco and Malaysia also participated in this drill. Saudi cement sector witnessed a strong performance during the month of, mainly driven by the expected implementation of the white land tax, which should encourage the construction activity in Saudi. Also, the government may remove the export ban, which was implemented in 2012. Currently, there is a significant overcapacity in the cement sector.
The news flow was pretty interesting in the banking sector.
Saudi Central Bank SAMA took some steps during the month which favors the banking system. SAMA increased the loan to deposit ratio to 90% from 85%, which should help address the current liquidity squeeze in the banking system and should support banks' NIMs and ROEs. SAMA also increased the mortgage sector loan to value ratio to 85% from 70%. In 2015, the mortgage sector loan growth slowed down significantly to 8.5% after SAMA cut the loan to value ratio to 70% in November 2014. During 2011 to 2014, the mortgage book of the banking sector grew at 37%.
In the M&A space, the acquisition of Americana, the leading F&B player, is back on track. What are the recent developments?
Al Khair National Investment, a vehicle owned by the Al Kharafi family, signed a preliminary agreement to sell its 69% stake in Americana to Edipito, a UAE-based company. The agreement is contingent upon successful completion of the due diligence. Americana is one of the biggest food and beverage outlet operator in the region. Currently, the company is operating around 1,600 outlets.
Devier, thank you. Thank you very much for your attention.